Welcome back to the Daily Journal. So we are reviewing my trade from the New York AM session. So the bias going into this session here wasn't necessarily bullish. Clearly we've had expansion and I'm looking for price to retrace into this 4-hour gap, right? So it's this candle that we're looking at. So clearly we had this reaction from the new week opening gap. And so my bias remained the same somewhat to the 6 a.m. continuation, which I traded just before this. That video is out, so you can go have a look at that. So you can see we had bounced at the 0.25 of that new week opening gap. Now dropping down to the 15-minute chart, you can see that this is where I was looking for the change in the state of delivery for the earlier trade that I'd taken. Or rather, when I got to the charts, I saw that work. I looked for a 50-minute confirmation to confirm that this was a reversal candle. We hadn't got that. However, we had these equal highs and this 15 minutes continuation model. So go check that trade out. It's a really nice little trade. But anyway, so going into the session, we hadn't had that shift in structure, right? So immediately my eyes go to all these equal highs, these reddish equal highs. So going into the session, I was expecting these highs to get taken out and then price to continue lower, right? From this 4-hour Fibonacci gap. So having seen price react to these levels, I expected it to trade up into that. Now I was just observing this session. I wasn't very interested in trading it. I had my win for the day. I was happy just to observe price. But when I saw this sweep, when I saw this sweep and this candle close like that, is when I got interested in price, because the thing is, this 50-minute balanced price range had been respected, right? The wicks do the damage, the body sell narrative, and even at the open, price had dropped lower. It swept the pre-market sell side liquidity. Also, it had this reaction at the 0.25 of this wick. So immediately that caught my attention. Once price had traded into that zone, the next thing I looked for was just simply a change in the state of delivery on the 1 minute. Now admittedly, my execution wasn't the best here. I dropped down to the 30-second chart, and it was these equal highs that I was looking for low-hanging fruit. And so with price retracing into this Fibonacci gap, like I was kind of eyeballing this order block. But of course, my change in state delivery was from the 1 minute. So I just eyeballed that as it happened in real time. And as price had this shift, it confirms to me that this would be a higher low, protected low. And that is where I entered. Looking for 2R. So above this is just a 15 minutes Fibonacci gap within this 4-hour Fibonacci gap, right? So I was looking for price to trade into that. I also was looking for this manipulation to give me some form of projection, and that's where I ended up taking the remainder of my profits. And so you might be asking, why am I using this wick and not this wick? Well, this was SMT. If you look at ES, you can see it made a lower low there, whereas NASDAQ did not. And this is precisely why I thought this low would be protected. And it's also the reason why, once I was in this trade, I'm also very conscious of the fact that price could retrace back into this range. So my stop loss, although I calculate my risk, which is always 0.25, I was happy to double that and give myself some breathing room, because while watching ES and price started to retrace lower, and sorry, one thing I meant to mention as well is that this was the 9:45 macro. Right, this is setting up for the 10 a.m. candles to open and expand. So that's another reason why I got involved at this level. I was very confident in my bias, because although ES had taken out these highs, you can just see here. See how ES had taken out that high? It had not yet taken out the main highs that I was looking at, which was over here. So I was still confident that price would at least come up to take out this high. You know, if it were to roll over, if I got it completely wrong, I knew I still had my man drawn liquidity above me. And that was from the London session. Plus this 4-hour fairly gap, which if price is going to continue lower, which I expected it to, I was expecting price to trade into that first. And the thing is, I'm also very confident in this profile. This is one of my favorite profiles to trade, where price has just been consolidating, going into the New York session, having traded, we're bearish, right? Price expanded lower, it goes into consolidation. I typically look for this low to get swept, but respecting the 0.25 of that wick on the 15 minutes is what dropped me down to the 1 minute. That changed the state of delivery. And why I love this move so much is it's such a clean one-sided delivery. You just have to be conscious of the overall high time frame bias, which is actually bearish. So you can't hold on to runners. Okay, so when price had traded lower, I was happy for this low to get swept. Yes, I was a little early. I should have stayed on the 1 minute, but that's okay. You don't have to be perfect. You just have to be right and manage risk. So when I saw this SMT with ES, I was very conscious of this exact move to happen. And so once we get the change in the state of delivery here, delivering from this fair value gap and this 1 minute order block, I entered as a new trade. And I immediately took off the trades that I took over here. I immediately took off at this level, right? And the rest of it got taken off around about here. So here is my trade. And you can see there's that 15 minutes fair value gap. This standard deviation came from this over here. So where did I actually end up taking? You can see I took off those entries right off at this low hanging fruit. I then used the standard deviation, and what was that? 258.70. Okay, so I actually held for the full extension. And yeah, that was the trade. Oh yes, I was on the 1 minute screenshotting that. Okay, there we go. So that was the trade. And this is what I mean by that clear one-sided delivery. Look how clean that is. And of course, if you had to play this forward, you'll see that price eventually just rolls over from that point. But I mean, look at that. That's stunning. It's a lot cleaner on this. So, I mean, that's the type of moves that you want to be involved in. And yeah, so that's typically the New York reversal profile, but within the overall high time frame bearish context. A lot of the times in the past, I've been caught out and trading to, looking like, oh my gosh, I've just caught the peak at bottom and it's going to trade all the way up to previous day highs. So you got to know your high time frame bias. But anyway, nonetheless, that was a trade. See you guys in the next one. Cheers.